On Issues and Insiders today, we revisit last week's plunge on Wall Street and its ripple effects on the stock market here, as well as the prospects ahead. Do stay tuned. Hello and welcome. It's Monday, August 12th here in South Korea, and you're watching this week's first edition of Issues and Insiders. I'm Min Sunhee. Today, we take a look at the recent fluctuations in financial markets here and elsewhere. For this, I have Professor Song Soo-young at Chung-Ang University live on the line. Professor Song, welcome back.
Yeah, thank you for having me here.
I also have Professor Greg Buchak at Stanford University live on the line as well. Professor Buchak, it's great to have you on.
Thanks for having me.
Professor Song, let's begin with an assessment of the current Korean stock market activity then.
Yeah, today we have witnessed some kind of recovery of the stock Kospi index. There is 1.03% increase of the Kospi overall index indicator. But however, last week we have witnessed really the ripple out if the yen carry trade unwinding that has taken place all around, has an impact on all around the stock market, and particularly in the Japan market has been a really serious impact on it. For Korean economy, because the dependence on the yen carry in Japan is not much in Korea, so that's why we have not seen much plunge at first on August 1st. However, on August 5th, the last Monday, we have seen that almost a 13% decrease of Kospi index within 3 days. So that was really huge. But this is very noise indicator, of course. However, we have tried to figure out or derive some valuable information out of these stock unusual movement. That is the key point from when we observe these Kospi and the stock price movement.
Right then. Aside from the ripple effects of the so-called yen carry trade, this investment strategy, global stock market fluctuations, Professor Buchak, have also been linked to fears about a potential U.S. recession. Simply speaking, if that is possible, of course, do you believe the American economy is headed in that direction?
So not yet, and hopefully the economy can make it until the September rate cut that's coming up. Big picture, a lot of the data that's been coming out of the US has been pretty mixed. Okay, so indicators have been slightly more negative than they were a few months ago, but there's a lot of noise and uncertainty around that. So for every negative data release that comes out for the US economy, there's also been a positive release. You know, the current state of the economy is pretty good. GDP growth is steady, unemployment's low, the stock market's still up for the year, inflation has come down. But what we really don't know is whether high rates at the Fed will lead the economy into a recession. People have been sort of laser focused on every economic report that comes out for news that kind of speaks to this question. 2 Fridays ago, there was a fairly negative jobs report showing the unemployment rate ticking up. This, together with the yen carry trade unwind that Professor Song mentioned, caused a lot of turmoil in the US and global stock markets. But later that week, a more positive jobs market came out and sort of calmed markets somewhat, and stocks ended flat on the week. So that dynamic where there's sort of one report comes out, it's bullish, another report comes out, it's bearish, that's pretty emblematic of where we are now. Basically, we're waiting for news that's sort of really definitive and decisive one way or another, and that just hasn't come out yet. Instead, what we're seeing is sort of much more uncertainty.
Right, and against that backdrop, Professor Buchak, what are your prospects with regard to Wall Street's performance on this Monday?
Yeah, I mean, so because of this economic uncertainty, markets are on edge. So any news release can cause a lot of volatility. I think there's kind of this easy calm in markets since the turmoil earlier last week. I think stocks today in Asia are up so far, and the US will probably follow suit. So beyond this kind of standard economic news around jobs and GDP growth and inflation, a big question here in the US in particular is how some of these big AI bets will perform. Pretty much all of the stock market gains in the US this year have been driven by this. Okay, so obviously there's a lot of physical investment and hiring around AI, which we've seen, for example, showing up in NVIDIA's recent performance. I think the question is whether this investment in infrastructure ultimately translates into sort of viable businesses, and that's yet to be seen. So as companies report earnings, we're going to get a clearer picture of what's going on there, and I would expect, again, markets to be really sensitive to any news around this.
Right, and perhaps expanding on what Professor Buchak has just said, Professor Song, the recent plunge on Wall Street has triggered talk about an AI bubble burst. What are your thoughts on this?
Yeah, as Mr. Buchak clearly pointed out, there is uncertainty, and then the future prospect is very unclear because of even at the current level of U.S. economic performance, GDP growth rate is still stably growing, and unemployment rate, despite the two-quarter consecutive increase, but the size is very small. But according to some economists, such as, for example, Sam has mentioned clear, and also Paul Krugman pointed out that the two consecutive unemployment rate increase clearly signals high possibility of the recession. So maybe U.S. economy is maybe a little bit under recession situation, but maybe it's too early to make a judgment about that, because clearly this is a pre-recessionary situation. However, the unemployment rate and the job increase is clearly very relatively low. The growth rate is quite low. And then the other neighboring economies, such as Canada and other countries, depending upon the situation, but the prospect is not good. But for example, European countries, at least we can say they have performed really badly during the past 2 quarters and in the last year. As a result, there is some positive signal comes out of the economic performance, the GDP growth rate. So all I can say is just a silver lining behind the cloud. That is the situation. So even though the U.S. economy relatively strong enough, and in comparison to other countries, they performed well. Clearly, U.S. economy is, I think, has reached some top level, and then the declining is most likely. So I anticipate the kind of a big step in the decrease of the federal funds rate in September. And also, I believe that Wall Street should be prepared for some upcoming possible recessionary situation.
Right, I see. Meanwhile, here on the regional front, Professor Song, the Bank of Japan has walked back on talk of rate hikes after its stock market tumbled in response. What is your outlook regarding Asia's stock markets going forward?
Yeah, actually, the reason why Japanese currency has been used as a carry trade strategy, because the yen, the currency value of yen has relatively stable, and the interest rate in the domestic economy of Japan is quite low. That's why the investors would like to borrow the money denominated in Japanese currency. Suddenly, the growth, I'm not sure. The Japanese Bank of Japan chairperson has decided to increase the interest rate. That could be a really serious threat for the investors who borrow the money in denomination in Japanese currency yen. So that caused some ripple effect around the world, and then I think this does not indicate the weakness of the economy overall, but it indicates the power of some capital managers around the world, and such as private equity fund or some hedge fund. They have moved around the capital around the world almost instantly. That could have a really negative impact on the stock market index and around the economy. So this is a little bit clearly a noise, but it may indicate the vulnerability of the Asian market and the particular Japanese stock market. But this is not unprecedented. I mean, Japan has sometimes they have too early or hasty change of the policy could cause they could face a serious problem, not only in their economy, but also in other countries' economy. So that is currently, that has been settled down, and it becomes a little bit calm and on the recovery pace. But what matters more important is the upcoming some GDP growth rate decline, and the U.S. economy is going to be more likely to be in the recess. That even though the Professor Buchak has mentioned it, the uncertainty is very high, but I bet on the more likely to be have a recess in the U.S. economy.
Right, I see. And Professor Buchak, a host of U.S. economic data is scheduled to be shared this week, including its consumer price index. Do these upcoming findings look to rock the boat, if I may?
Yeah, well, speaking of rocking the boat, before we get to that, one fact about this yen carry trade unwind that a lot of people I think don't know is actually there was a similar yen carry trade unwind in 2007, a little bit before the financial crisis in 2008. So kind of a different situation, but this is a thing that sometimes can spell trouble. On the U.S. economic news front, the CPI, so that could rock the boat. Markets are really sensitive to any news releases given this uncertain environment. I think sort of weakness in the unemployment side on the U.S. Notwithstanding, the inflation data has actually been looking pretty good. Okay, so inflation is really coming in around the Fed's target of 2%. Markets, therefore, appear kind of confident we've hit that target, and that gives the Fed the green light to start lowering rates to stave off an economic slowdown. Okay, and they're expected to start doing this. It could be small, it could be big, starting in September. So what could go wrong? I think sort of the kind of nightmare scenario for the Fed here is the CPI comes in actually higher than expected. That could make it harder for the Fed to lower rates at the next meeting, which would be very, very upsetting to markets. On the other hand, if it comes in below expectation, okay, that's sort of a sign that the economy might be slowing down more than the Fed wants. But what that means is the Fed will have space for future lower rates. So, you know, the dangers to the upside, I don't think there's anything in the data to suggest that that will happen.
Right. Professor Buchak, this is an impromptu question. I really should have asked you this earlier when we were starting the talk. We've been throwing around the phrase yen carry trade quite a bit today. For the sake of people not aware or not familiar with this particular phrase, could you give us a very quick and easy definition, yen carry trade?
Sure. So Professor Song alluded to this. The idea is that interest rates in Japan are super low. So you borrow in Japan, you take that money and you convert it into a currency of a country where interest rates are high. And the idea is you earn high interest rates in the foreign country and you just have to pay low interest rates in Japan. This is a trade that's like done in huge volume all across the world. Famously, even they would talk about like Japanese housewives doing this trade. So it's very big. It's a very crowded trade.
Right. And now, Professor Song, very broadly speaking, what look to be the implications of a wider war in the Middle East on global stock markets, do you think?
Oh, the war between Israel and Iran is, I hope also unlikely to take place because it caused a really serious damage to not only to the both countries, but also to all around the global economy, who now global economy is on the verge of a very weak recovery. Then the war took place again, broke out again. It could be a devastating damage on the economy or global economy. So, therefore, that is why Iran and Israel they are afraid of the breaking out all the war between which could be easily developed into the regional or the global war. So that's why U.S. dispatched the carrier and to settle down and send some F-22, who is a stealth jet fighter. So I expect the war may not have a serious impact. So that could have some positive impact on the recovery of the economy. And Professor Buchak has mentioned a little bit about some Japanese yen carry. And what I would like to add up his comments is that the yen carry trade or some kind of foreign currency carry trade always exposed to the risk of not only to interest rate difference between the two countries or two currencies, but also to the exchange rate. The currency exchange rate risk is also exposed. That's why it is very risky strategy, and usually they are conducted only by the risk-loving private equity fund or hedge fund or some very big chunk of capital managers are prone to do that. So that is sometimes should be some restricted to stabilize the world economy. And let me add up a little bit about the Korean economy is because the Korean economy in the last month, we have witnessed, last quarter, we have witnessed minus 0.2% GDP growth rate. This means very, very, even though it is a base effect, but however, it indicates very negatively of the prospect of the Korean economy. And even though Korean economy's unemployment rate remains 2.9%, relatively look very well, but we should not be deceived because in Korean economy, agriculture, fishery, and the forest workers, when they are off the season, I mean, they do not work. They do not look for the job anymore. So they are not counted as unemployed. That's why in Korean economy we have such a low unemployment rate. So this is not good indicator to be used or to rely on when the decision of the policy. Rather, we should focus on the employment or working age people's employment level. That is really bad.
Right, I see. Meanwhile, in the US, Professor Buchak, keeping in mind the most recent developments and speaking within your capacity, of course, as a scholar in the field of finance, how should the Federal Reserve seek to approach its task of rate cuts?
Sure. So inflation's been coming down. Unemployment is sort of more or less where the Fed wants it to be. So the Fed sort of looks on track to stick the so-called soft landing. That's this idea where it brings down inflation without triggering a recession. I think there's some uncertainty of whether we'll really stick that or not. But as I mentioned, sort of the expected path here is the Fed is going to start cutting at its next meeting in September. In the meantime, there's going to be bad news coming out. There'll be some surprises. You're going to see markets and investors sort of overreacting to that, I think. Last week, when stocks were down a bit, you saw investors saying things like, oh, the Fed is too late. They need to do emergency rate cuts before September. I really think that's wishful thinking. The Fed isn't going to have an emergency rate cut unless there's sort of a real economic downturn starts materializing in the data. That means like GDP growth and employment really start looking bad. Or if there's a major market crash. And the 3% down day we saw last week, that's not a crash that would prompt the Fed to take action early.
Right. Meanwhile, Professor Song, back here in Korea, debate has been reignited over an upcoming plan that subjects retail investors to taxation for capital gains. Could you tell us a bit more about this particular plan and where do you stand on this debate?
Currently, because our economy is a really bad situation, even though the current account that has been recorded 122 billion some dollars. Also, that was really record, unprecedented record, more than 20 years or so. But we should not be deceived because of such a high current account. Because current account is consisted with the balance of trade, net export, plus some earning from the foreign investment. So that does not necessarily imply that domestic economy is a situation. Our domestic economy situation is really bad. That is clearly illustrated the negative GDP growth rate. Even though the semiconductor market and the car market is very favorable to the big enterprise, multinational enterprise in Korea, such as Hyundai and Samsung and SK Hynix, but that is not going to distributed among the domestic consumers and domestic people and the domestic small and medium size entrepreneurs. So that is really weakness of Korean economy right now. So what I urge the current cabinet of Korea, they must focus on how to improve the domestic economic situation, and then to that regard, maybe some abstination of the financial gain taxation is maybe good, but in itself it is good because the economy is a bad situation. But however, in the long run, the change of tax rate, arbitrary change of tax rate, is always caused a serious problem. I mean, tax rule. So that is stabilize the tax rule, and then based upon that, then they must use the fiscal policy and don't be afraid of using the national debt to improve the domestic economy.
Right, and to ensure the livelihoods of the people here then, Professor. Professor Buchak, let's end with your words of advice amid prospects of greater market fluctuations in the stock market arena in the near future.
Sure. So have a long-term view. Don't try to time the market. Stocks go up, stocks go down. If you had sold after the crash in Japan last week, you would have missed the entire recovery. So it's pretty simple. Just make sure you have enough money in a safe space to pay your bills, buy your groceries, pay your rent. And besides that, really the best strategy is for almost everybody is just invest a little bit of every paycheck. Don't stress too much about what's going on day to day, and don't try to do the yen carry trade.
Right. Thank you for your words of wisdom, Professor Buchak. And Professor Song, as always, thank you very much for your insights.
Thank you.
Right. Well, that is all the time we have for this edition of Issues and Insiders. Thank you for watching. See you same time tomorrow.